So same question for you guys. Type in yes if you're ready for COVID to be over, whenever that is. And again, I'm not a virologist. I don't know when it's over, and I have don't will never pretend. But give me a big yes. Yes. Who's ready to go out and do stuff again, like restaurants and travel or whatever you like to do? It was funny. I had a conversation with one of my friends the other day, and we were we were talking about just going to lunch, and we didn't do it in the end. But we were just talking about how like that was a normal conversation just 7 8 months ago, and now we're not even doing it anymore. So anyway, I guess the second question, if you're ready for this thing to be over, who's ready to maybe make some profits in the meantime and kind of betting on this thing to be over at some point? Anyone? Yes, give me yes. Oh, I need more yeses. I'm sure you guys want to make money on potentially how this thing is gonna stop happening. Okay, so just to give us a perspective, and Jeanette was kind enough to kind of allude to this, and this is, I want to be clear, this is not to pound my chest, that's not my thing, but I just wanted to kind of give you some perspective on where we come up with our ideas. So in September 2019, so that's a year and a few months ago, we called for what we called the trade of the decade. And it really ended up actually being the trade of the decade, and our bet was to essentially see bonds fall towards zero. And I say towards, not exactly to zero, but much, much lower. And I don't know if you guys remember what happened in January through March, particularly February, March. This is what happened. Bond yields dropped to zero. Bond prices spiked through the roof, and it literally was the trade of the decade for us, no doubt. And we saw clients booking profits anywhere from 25% to 1,000%. That's a 10x. Big trade, and that's what happens when you watch some of the macro things come together. And what that really has led us to is start looking for the next thing after that trade really hit its targets early year, and it kind of started work. It kind of played out a little bit further into the summer, and then it was really done in just a beautiful trade. And so what we now are looking at and or doing is what we think is the next really big juicy trading opportunity, which we think has tremendous potential. And the way we're looking at it right now is that when we do our channel checks with our institutional contacts, investors, subscribers, and whatever else, and we do this almost daily at this point, but on the weekly channel checks, particularly the smart money investors, hedge funds, family offices, that kind of stuff, they are already indicating that they're piling into this trade setup in a very major way. They've been doing it now for a few weeks, but it's really just the beginning. Like we've literally only just scratched the surface. If you're a baseball fan, I would say we're probably about in the second inning of all this. So there's plenty of ball left to be played in that trade. For a little bit of perspective, just so you guys know who I am, that's my mug right there. I originally come from more of an investment banking background. So it's always been my thing to look at things a bit more holistically than just drawing a line on a chart. Although that certainly can be part of the analysis. Then moved on to hedge funds and family office as a portfolio manager, and I'm an investment and trading advisor and the head at the investment strategist at thesteadytrader.com. And I'm also a co-founder and the CIO of Blue Marlin Advisors, which is our registered investment advisory company, RIA. So that's just so you guys have a bit of an idea of kind of where I come from and the way I think about stuff in the markets. So having said that, things still don't look very good when you look at COVID cases. And again, I need to say this for disclosure purposes. I'm certainly not a virologist. I'll never pretend to be one. I barely know how to put a Band-Aid on it properly. I manage, but I struggle sometimes. But anyway, I mean, things just don't look very good. Things are still racing higher in terms of rates. And this is I think I took this screenshot about a few days ago. Yeah, early this week. COVID cases, this is just the United States alone, not good. Things are not looking very good. On top of that, it's still a little bit unknown. We have more clarity now, but it's still a bit unknown, and the opinions kind of diverge about when we think a vaccine will actually become available. And to top all that off, a lot of people are really quite skeptical of actually taking a vaccine. If you look at this survey, it shows that only 20% of people are actually willing to take it immediately. Basically, 50% of people are going to wait, and the other 30% aren't either not sure, won't take it, or maybe at some point. So that's not very rosy from that kind of perspective. And I think that's where a lot of people are kind of stuck right now. But there is news, or there's hope, I should say. And the hope really revolves around something we've already started to see a little bit over the past couple of weeks. And that is that these positive headlines around vaccine developments, um, uh, cures of all sorts and therapeutics around the COVID-19 virus or pandemic are just about imminent. I mean, we've already had some of these headlines cross the tape the past couple of weeks, but again, it's really just the very beginning of all this. And if we look at this through the lens of the stock market, this could lead to a major pop in a select few groups of stocks and sectors. And again, we've already seen a little bit of that happening, but we think we're literally just in the very beginning of all this as people are slowly starting to position for this and realize what is actually happening. So if you look at a stock here, like this is a random stock I took, we think from current levels, this is the kind of opportunity where the stock itself, forget options, which you could certainly lever things up, to have at least 30 to 50% of possible gains ahead. So any of the stocks and things we're looking at right now has at least a 30 to 50% higher move from here, from our perspective. And this is really all about kind of putting our emotions aside, right? This is not a sort of a political way of looking at things or anything like that. But at the end of the day, what the market really wants is the market kind of wants a vaccine to see a full economic recovery at some point. So the market really needs to see a vaccine or developments in the vaccine, and that's really, really, really important. So this trade or this investment trade that we're doing right now, this is really about putting your emotions aside and just taking advantage of what the market is offering as a promising opportunity. This is about looking at the data, looking at the market's doing, what the investors are doing, and putting our emotions and opinions aside. And I think that's a really, really important point when it comes to high probability trades and setups like this. And underneath all of this, the most important thing to understand is what causes a move like this to take place. And it all has to do with investment managers, investors and traders around the world rotating their portfolios. This is just the equity part of the world that I'm showing you here, but this works in all asset classes. People rotate from one thing to another as they're looking for the best opportunity to park some money. And this sector and group rotation is really where the big money is made. So people might move from transportation stocks to capital goods stocks to utility stocks to whatever. Those are the moves that really make things make big splashes in the market. So you might recall what took place in March of this year. It actually took place already in February, but March is really when it hit. And that's when we saw a massive rotation into what we now have started referring to as the stay-at-home stocks. Did anyone participate in this move? Anyone buy any Zoom or Peloton? Type in yes if you bought, or maybe even what you bought. Zoom, Peloton, Microsoft, I mean, there's a ton of stocks, right? Who participated in that move? Don't be shy, because if you did, that's an awesome job. Really, really well. Yeah, Doku, exactly. Well done. Yep. And a lot of stuff, exactly. Roku, yes. AMAT, yes. Well done, guys. So that's exactly the kind of stuff. And so that was not the result of randomness or no reason to it. The reason why this took place is because money was rotating out of cyclical stuff and into more of this vaccine stuff, right? Vaccine beneficiaries, if we can say it that way, right? It wasn't random, and there was massive gains to be had. The problem is that trade is probably done by now, although awesome returns for those that took part in it. And so from our perspective, the recovery in the equity bull market does look to remain intact to continue next year. But much more importantly than that simple and somewhat vague statement is that what we see is that the average stock not just Apple or Microsoft and Amazon, is very likely to dramatically outperform the broader market. And when I say broader market, I mean a market capitalization weighted S&P 500, right? So if you look at the story of the past few years, 2-3 years, it's been exactly the opposite story. It's been a few mega cap stocks that mostly dragged or pulled things higher, while the rest of the market participated a little bit, but mostly treaded water. And so if you look at this from an economic perspective, what we had so far is we, of course, had the ugliness of February and March that we all don't want to recall, but I have to just quickly bring it up so you remember. And then we had an initial bounce back. But that initial bounce back by a lot of investors was confused as an economic recovery. What it really was just a reopening trade as we came out of lockdown. That's all that was. So the things that bounced very sharply were the Zooms, the Pelotons, the DocuSigns, you name it, the Apples, the Amazons, all those kinds of things. What's happening now is we're having, I call this the square root shaped recovery, as you can see here. Now is where we're going to see a real recovery in the broader, in the I call the real economy. Not that Amazon's not a real economy, but a much broader swath of equities and groups and sectors. But underneath this square root shaped recovery is something that's much more important. And underneath the surface lies what I call the K-shaped economic recovery. The K-shaped economic recovery is exactly what I've alluded to here for the past few minutes. It's a complete divergence between the haves and have-nots during COVID. The things that did well, we just said it a few times, technology, parts of retail, software services, all the things that you guys that participated in that trade and did so very well, made money on. The things that haven't done well is entertainment, travel, hospitality, food services. That's the red line. So we have this big, what I call the hungry crocodile chart, right? Big open mouth. And we think there's a big mean reversion that's about to happen. And the reason for that is because the market is a forward-looking mechanism. And I'll say this a bunch more times because I think a lot of times people don't think of it that way. People get too caught up in the at the moment or daily headlines where they don't see through the noise and understand the market looks forward. So this is really where the opportunity is for big profits. We're looking for the hungry crocodile to close its jaws, at least to some extent, for a big mean reversion move in this, and I'll elaborate this here much more over the next few slides. So this is where all the opportunity is for the big profits. That's the best part about this, that it's very clear what it is. So let me discuss a little bit what the playbook is. This is called the post-vaccine trade. We call it the post-vaccine trade because it's the trade that set up once the headlines around vaccines coming to market are starting to hit. And we've already seen, like I said a few minutes ago, we've already seen a few initial headlines come out, but we think we've really just seen the very early stages of that. So we're about to see a much more of this kind of good news around the vaccine front. So we call this the post-vaccine trade, the post-vaccine portfolio. If you might remember what happened back in March, aside from us having to hunker down with cans of tuna at home, what also happened is we had the CARES Act passing the Senate on March 25th, and it passed the House the next day. I believe President Trump signed that into action on the 27th of March or thereabouts. If you don't remember what the CARES Act really was, and you can read about it in longer terms if you care, it essentially encompassed all the rescue package, or at least a bunch of them on the fiscal stimulus side, anything from the PPP, Payment Protection Program, to some of the stimulus checks that we got at home and those kinds of things. And what's really important about that point is that it was a headline, right? The market was waiting for that headline and even anticipating. And just before those headlines, literally 2 days before, the market started to bottom and it really started to rip higher. So we've had a massive rally then. The same setup is happening right now, but the headline's different and the trade is different. Meaning the headline now is not a rescue package in the fiscal sense. It's a rescue package through the lens of a vaccine, right? It's also kind of a rescue just through the lens of healthcare. Does that make sense, folks? Give me a quick guess if that makes sense so far. We're going to go into this much more detail over the next few minutes. Okay, good. So this is important. What the market does, and I'll say it a few more times, the market is a forward-looking mechanism. It doesn't look forward to the next day or the next 2 weeks. It looks forward on average 6 6 to 9 months, sometimes even 12 months forward. And if we look at what the market's telling us right now, it's very clearly looking past the next couple of months, the next 3 months. It's really looking forward 6, 9 to 12 months out. And to give you a bit more, and like I said before, the stocks ended up rallying in anticipation of an economic recovery. What I should have written here is, instead of economic recovery, is a reopening of the trade coming out of lockdown. That's really what that initial anticipation was. And again, massive rally, as you guys know. But like I said before, there were the haves and the have-nots. And a lot of you guys that participated in these post-vaccine, in the V-shaped trade, the stay-at-home stocks, like Dave and Dan and Andy and Genevieve, and Manu and many other people that were mentioning it up before, you participated in these stocks up here, the ones that really did well. But a lot of the other stuff, that I'm going to call it crap for lack of a better term, it rallied off the lows, of course, but it didn't really do a heck of a lot, right? So this is actually the broader S&P 500 here, this green line, and this is some of the stuff that didn't do well. And if you make this even more clear, here we have stocks like Zoom and Peloton literally zooming higher, no pun intended, and underneath, again, stocks that didn't do so well. And again, the difference is, or the big point is, that the majority of stocks live down here. The average stock didn't recover a heck of a lot. It bounced off the lows, no doubt, right, as we reopened, but it didn't really recover a heck of a lot because the real economy still has a lot of problems. So let me walk you guys through an actual concrete example of what I mean. And this is kind of a freebie, if you will. Call this a Black Friday freebie, if you will. Let's have a look at a company called Carnival Cruise Lines. Has anyone ever been on a cruise in here? Show your hand if you have. I've actually never been on a cruise, so I'm not raising any hand. I've never been on a cruise, but my wife wants to go on a 40th birthday cruise thing in a couple of years, and on a dance boat. I don't know how I feel about that, but I guess I'll have to do it at some point. Anyway, the point is, let's have a look at the stock. So, as this name implies, the company operates cruise ships, and to date, the bookings for cruises remain still fairly benign, very similar to like flight schedules, right? This is a chart I took a few weeks ago. Booked flights and schedules are really kind of benign. So you can imagine not a lot of people are booking cruises. Makes a lot of sense. You really don't really want to go. I think they launched a cruise 2 weeks ago, and then I think like 5 or 9 people ended up having COVID. This is literally a couple of weeks ago after they reopened, and so that wasn't very good. But what is very likely to happen is that upon more hopeful news headlines around COVID vaccines and treatments, people will be quick to begin booking cruises in advance. And let me be very clear in what I mean here. People are going to be very keen on booking a cruise, which is very different from saying they're going to actually go on a cruise boat anytime soon. And I know this empirically. I know a lot of cruisers, a lot of people I used to play golf with, and they are just literally waiting. They can't wait to book a cruise, and they're very close to doing it upon just a little bit more good news on the vaccine front. And again, people are going to look to book a cruise, especially since they're going to be cheap right now and to book, and they can rebook at any point. So that is very likely to happen. But it does not mean that we expect people to go on cruise ships come January 1st. That's not at all what we mean, but people are going to start booking. And let's think about what that means for a company like Carnival Cruise Lines or Royal Caribbean or any of the other ones that you might have out there. What this means for a company like Carnival is that its cash flow is going to likely lead to a sharp pop in its stock price. Let me put that in perspective. So this is a company that had very little income for the past 7, 8, 9 months, right? Obviously, because cruise ships have been stranded. So even just a few bookings are essentially going to re-rate this stock. Let me walk you through what that really looks like. I don't know if any of you guys do fundamental analysis, but it comes down to something called operating leverage. And what operating leverage really is when a company's costs come down, whether they're variable costs or fixed costs. In this case of Carnival, they were even helped out by government spending help the rescue packages. But what's likely to happen is because of that levered factor where variable costs have come down so dramatically for a company like that, is that they're going to have higher profit margins, very likely. Listen to this. They're very likely to have higher profit margins than they did 12 months ago. Think about that. So these are companies that from a margin perspective are going to see higher profit margins in the intermediate term once people just start booking some cruises than they had just 12 months ago. That's a big deal. Okay, and I want you to really think about this, what that means, and I think everyone can understand. And what that's also going to mean is that, like I said before, the company is going to get re-rated, which also means that analysts are going to have to basically upgrade the stock, and they're going to fall over each other to do that. And there's already been a couple of positive headlines, by the way. I mean, one of them, from on the vaccine front, we had some initial good headlines around the Moderna and the Pfizer with the BioNTech combo, and that's good. But there's other headlines, like for example, on October 30th, the CDC allowed cruise ships to basically start going again. Now, most of them haven't done that, but the green light is kind of ish there. It's just the beginning. It's just an initial little green light so far, and this has already happened. Let's talk about the stock price itself of CCL. Well, it's been an ugly year for a stock like Carnival Cruise Lines. CCL is a ticker symbol, as you can imagine, as everything we just talked about isn't exactly something that would have been good for the stock. By the way, the stock is up 6% just today as I'm speaking this right now. But like I said, it's not going to take a lot for the stock to pop. And if we think about how much could the stock recover, let's look at this chart on a forward-looking basis. How much could the stock pop? It's a little bit anyone's guess, but could it rally all the way back up to pre-COVID levels, like to where the stock was in January, February? I mean, that's a 250% move. At this point, a little bit less because the stock has rallied a bit over the past week and a half. But still, that's a big move. Let's call it 220%. That's a little bit greedy, and I'm not calling for that. I think that's a bit greedy. But what if the stock only went back to, let's say, where it was in June, or maybe to where it was just before it completely fell apart in March, right? That's a 40% move. Maybe let's call it a 30% move from now. That's a lot of juice left in that trade. Maybe what if it goes back into just the halfway point between where it was in January and where it was at the lows there in April? That would get it to at least 35, probably within that vicinity, right? Roughly speaking. That's a big move. That's a really, really big move. And what we are seeing is that the spring is really coiled up. And this is just one example, but the spring is really coiled up. These opportunities don't come often, and they rarely line up all at once. And this is very similar to the interest rate trade that I was alluding to before, that it's rare that these things happen all at once. It usually happens, you usually get like 3-4 opportunities like this per year. And we think this is a big one right now. So the spring is really, really coiled up right now as all this stuff is coming together right now at the same time. And if you look at this from a sector perspective, what are the sector sensitivities to a positive vaccine news? I mean, I think we can probably imagine what some of them are. Like, what's going to react positively to further good news on the vaccine front? Again, something that everyone knows is probably healthcare, consumer discretionary. But what about financials? What about real estate, consumer staples, industrial stocks, big one? How about energy? And how about materials? What's not going to fare too well? Probably information technology to a good degree. Not that those are bad companies. What about communication services, right? Those are going to be the kinds of things that are not going to do so well. And I'll refer back to the stuff on this chart here in a few minutes, but as a side note, we actually think that a substantial increase in Treasury yields, like right now the 10-year yield is, was like 90 basis points. I don't know what, I haven't looked at it here the past day or two, 8.5% on the 10-year. It is very likely that if we see excuse me, sorry, 85 basis points, excuse me, not 8.5%, 85 basis points. It's very likely that we see mega cap tech stocks like Apple and Amazon's not a tech stock technically, but Google and those kinds of things, Amazon and Google, even Facebook, if rates go higher to a good degree, it is very likely that those kind of stocks are not going to go higher, right? And so a successful vaccine rollout, for example, could really be a catalyst for higher rates, and it's already starting to happen, right? The best part about all what I'm telling you here is that it's already starting to happen. Again, we're only in the second inning, so there's a lot more room here, a lot many more innings left to play. So what's the trade? Serge, just bring it to me. It's Black Friday, I have a lot of time, I want to go shopping. What's the trade? Okay, so here is how we're looking to make money from this. The best part of all this is there's not just one stock. It's just this Carnival Cruise Lines. It's not just one stock. There's an entire portfolio of stocks that could be about to rally in a very major way. Again, think back to the rally that started in March of this year as people rotated money into the stay-at-home stocks. We're thinking the opposite is going to happen over the next few months. Right? So the first idea, the simplest idea, and the one I think is totally it's going to work very, very well, is just to buy a basket of stocks, a few select stocks, and we patiently wait for the setup to initiate. And again, like I said before, we're looking at likely seeing a potential payout of anywhere from 30% on the low end to 50% on the stock itself, right? So that's a very simple way of expressing it, and we have a list. We have a list ready to go. The second one is if you want to be even simpler, if you say to yourself, hey, Serge, this is nice, but I don't want to buy individual stocks. I don't have time for that stuff. Just give me an ETF. Well, there's at least a couple of ETFs that are in the absolute sweet spot to take advantage of this. And the potential there too is, again, anywhere between 30 and 50% and probably more as well. But what if you say, okay, Serge, that's nice, but you know what? I want even bigger profits. What do you got? Well, if you want even bigger profits, there's a set of stocks to short or bet against this long portfolio. So let me give it to you this way. This is a simple visual around it. So the reality is that what's something called mean reversion, I alluded to it before. We're looking for the hungry crocodile mouth to close, or to at least close to some degree. So while we're looking to buy a few stocks, there's a few of them that you can bet against, right? And it's the same trade, allows you to diversify a bit more and lever up and get even bigger potential gains on that, right? So that's idea number 3. That's the third way you could do this, is to go long and short if you roll that way. If you don't go short, if that's not one of your things, don't do this. Then I just give you 2 other ways of doing it, right, before. So in this case, what you would do is you would buy the stocks that we think are likely to go up. You would short a selected basket of stocks against those long plays. And again, you patiently wait for setup to initiate and play itself out. And for those of you that are still not seeing enough juice here, here is another thing you can do. So if you really want to potentially supercharge your profits, there's one more way, and that's using options. And here, if you want to potentially turn the 30 to 50% potential profits into something like 10x profits, that's 1,000% profits potential with less capital at risk, this may be what you want to look at. And the way we do it here is we're looking to make some bullish bets with options on those stocks that we like to buy, and we're going to make bearish bets on the stocks that we like to sell or bet against. So those are 4 different ways. So the fourth one here is what we call leverage with options. We're trading the options. We do a trade we're using options on the stocks or ETFs. We're technically risking less than if we do stocks or ETFs, just because we have less capital at risk. We have potential of what I would estimate about 10x gains, 10x, which again is 1,000%. So those are some of the ways we can do this. There's one more way, and that's using something called the pharma stocks. Now, our base idea, the base trades that we are doing around this, are all revolving around non-pharmaceutical stocks. But we just brought someone on board who's an absolute implied volatility expert. His name is Mark. You'll meet him. And he is doing trades on the big pharma stocks. Think Pfizer, Moderna, AstraZeneca. And here we're also looking at least 50 to 100% profit potential. Probably, quite frankly, it's probably more like 50 to 200 or 300% profit potential. So that's another way you can do all this. So if you're just joining and you're looking at all the stuff I just mentioned here, let me just quickly say this. Why do this trade? First of all, there's a lot of profit potential, like huge profit potential. And what we're looking to do is we're looking to profit from a true reopening of the economy, not from just a coming out of lockdown, but an actual true reopening. Like the force, think about it this way, folks. There have been $2 trillion of savings on part of the United States public since the pandemic hit. $2 trillion. What do you think those people are going to do, at least to some extent, once they can actually go out and frolic around again? I know what I'm going to do. Think about that. It's also a portfolio and retirement hedge. And really what it comes down to from a strategy perspective, it's an unbelievable trend following trade that we see the pros have been talking to us about since the summer, since I mentioned this to Jeanette, as she alluded to before. But they're no longer talking about it. They started doing it already. And again, we're, in our opinion, just in the second inning of all this. So by now, I have to ask you whether you have found this helpful. You now know about a serious profit-making opportunity that has been created in the market, and quite frankly, Wall Street and big bankers are taking advantage of this right now. They really are. We also see this on the derivative desks. I just spoke to a friend of mine that works at Morgan Stanley, and he gave me some insight that I don't want to disclose out loud, but it very much points in the direction that those guys are positioning very strongly on this. So it's not just the buy side, not just the fund managers, also Wall Street itself is banking on this. No pun intended. So you now have a strategy for pinpointing stocks that during the true reopening of the economy are very, very highly likely to show massive gains over the next 3 to 5 months or thereabouts. And really, you basically have an unfair advantage right now on the rest of the market. Most people right now are not thinking about that. We know that, we've done surveys and we see it. So let me ask you this, have you found this helpful so far? Do you think this has been a good 35 minutes spent so far? Has this helped you so far? Do you think you could use what you've learned today to potentially grow your portfolio and maybe provide a better life for your family or your portfolio? Do you want bigger results? And if yes, would it be okay if I show you a way to go even deeper and get bigger results even faster without having to spend a lot of research on this? Essentially, what it comes down to is you have two options. You could do it alone, right? So that's your first choice, is to just do it alone. You certainly could do that. You could try to do this on your own, spend a lot of time and try to figure out all the research. Or you could be the other person and make a choice to take action. You could be the other person who in life just seems to, like they always seem to be getting lucky. The other person who just appears to always be in the right place at the right time. You know that kind of person, right? I used to have a friend like that in high school. It pissed me off. And it's the other person that seems like life is just too easy for them. It's that other person that you kind of secretly wish you could be a little bit more like, and you know that person, right? It's the one who bought Amazon stock before it rallied. It's the one that bought Apple stock before the iPod came out. It's the person who always seems to get picked for promotion over everyone else. And it's the person that got asked out by the girl to go to dinner. So this opportunity in the market is going to happen with or without you, and it's already started. Again, we're only in the second inning by our opinion. So there's a good chance that traders like yourself are going to take record-breaking profits from this market-making opportunity with or without you. because they are not afraid, right? So the choice really here is yours. I decided that it would be unfair to not give the action takers here today on this Black Friday, which you may see yourself as being one of them, the opportunity for us to work together. And so as you can see, this is a process that works. And what you're going to discover here is an opportunity for, like I said, huge profit potential and really turning an opportunity into an absolute windfall opportunity, very much like we talked about that trade of the decade with the interest rates. And we will show you where to take profits, where to get in, and talk about this on an ongoing basis as we are actually managing the portfolio through it ourselves at our investment company. So by now you might be thinking, Serge, I'd love to get started. Just tell me this is not expensive, because it's been a rough year. The reality is the value here is $997. Now, that being said, I know that people would gladly pay probably $12,000 for this, but I wanted to make this affordable for you right now. So instead of $12,000, you could get access to everything inside of this for $997. And if all this did was guide you on finding winning trades, let's say 80 to 90% of the time, would that be worth it for you? What would that do for you? What would that allow you to do? Would you be more flexible in going to dinner and restaurants and travel? Think about that. But today being Black Friday, here is the deal. This is an unbelievable offer that, quite frankly, took a lot of arm wrestling between myself and our marketing team, and they won. Guess I have to go back to the gym a bit more. But it's not $9,000, it's not $997, it's only $297. And here's what you're gonna get. What we are doing is we're going to do and to trade and invest through this post-vaccine portfolio together in real time, all the way up to March 31st, 2021. So by my math, and I wasn't the best at math, but that's 4 months. We're gonna send you a real-time trade alert every time you open a trade, every time you close one, and we're gonna walk you through this in real time. You also get access to our personal Inner Circle members area, which I'll talk about in a minute. You get access to a chat room, and you get access to live weekly member webinars. You can go to steadytradersecrets.com/vaccine. And I don't know if Jeanette, maybe you can type that in or have someone type that into the chat box. It's at the bottom here of the screen, steadytradersecrets.com/vaccine. So it's not 9,000, it's not 97, it's only $297, and that's a one-time fee. That's it. It's not a recurring fee. $297. Here's what Robert says, for example. He took a trade in Apple that we did. He bought 10 puts, and he actually made in less than 1 hour. He made a $700 profit. So that was pretty good for him. But here's bonus number one. Bonus number one is that you get full, complete access to what we call the fully loaded Inner Circle. This means you get access to our live daily chat room, where we also do some day trades. Not that you have to do day trades, but if that's what you do, we do them in the chat room. And you get access to our weekly, and I say weekly, live member webinars, where we give you all the updates you need on this. And I make videos probably once a week on updates on this portfolio and much, much more. If that's not enough, you also get access to our Market Rover scanner. This is a proprietary tool that we built to manage money at our investment company, Blue Marlin Advisors. And this is an online tool. It's totally web-based and it's accessible from anywhere. It's there for you. You get full access to it as you have access to the portfolio, the post-vaccine portfolio. Now, for the portfolio trades, let's first start, because you get a lot of different stuff here hand delivered to you. The portfolio trades of the post-vaccine, they will be released as stock ideas, but we also give you a way to express those views with options. So if you like to buy the stock or the ETF, you do that. But if you'd like to do options, is anyone here an options trader in here? Because we're going to give you the options trades as well. And I'll show you, we already closed one options trade, by the way, on Moderna. Just so you know, I'll show you that in a minute. For actually two, for 162% profits, and the other one for 24.8% profits. I'll show you that in a minute. So we're already making progress on this. We're already doing it. Paul, for example, he took a trade. He made 26,000 pounds. That's like almost $150,000 on GDX on a trade alert that we did. Lisa, for example, she didn't get an offer like you did, and she made her money back from just joining the inner circle very quickly, right? So the question is, are you committed to taking action? Do you see the value here? If yes, go ahead right now. It's $297, and it's only, again, this is a one-time fee. All the way access until March 31st. This is important. Let me quickly show you guys what happens once you join. What happens is you get full unrestricted access to our entire inner circle membership, okay? So you get access to the market Rover, which is that scanner I just talked about. You get access to our chat room. You get access to our trade of the day portfolio, which is right here, which is up 72% year to date. You get access to our investment portfolio, which is up 100% year to date. And you get access to the post-vaccine portfolio, right, that I just mentioned. Again, we're going to walk you guys through this in real time every week. You get trade alerts sent to you on these when we get in and when we get out, right? We think this trade will have run its course by March 31st. That's why we give you full unrestricted access until March 31st. If you want to continue, you can continue with the internal membership at $147 a month. But for right now, it's $297. That's a Black Friday special, and you get access all the way through March 31st to really capitalize. That's our main objective right now, is to capitalize on this trade. Like I said, we also do these trades for pharmaceutical stocks. So let me show you what's already happened. So for the pharma stocks, I'm going to bring over our spreadsheet. Up here, you can see we entered 2 trades on October 30th. The first one on Pfizer was closed for 162% profits, and the other one for 24.8. Let me show you something else. I don't want to show you the whole portfolio because that would be unfair to the people that are joining, but I'll show you, let me just put it this way. We bought CCL, which is Carnival Cruise Lines, and we bought it at, let me check quickly. We bought it at, I think, $16.50. It's now at whatever it is. It's up another like 6% today. So we bought it, I think, here. So far, this trade is up 33%. It's just one little example. And we're only starting. This is literally just the beginning of it all. Does this make sense? Type a yes into the chat box if you can see that this makes sense. Does this make sense to you guys? So let me type in www.studytradersecrets.com/vaccine. That's how you can go with this. Okay. Yes. So the trade alerts get sent out. The trade alerts get sent out usually in the morning session. They're not day trades, right? You do get access to our chat room, our day trading chat room, but that's in addition. That's all in addition to the actual post-vaccine portfolio, right? Those are all additional bonuses. Okay, so let me be clear. You're getting access to here a crazy value of only $297. That's the best part. So if you don't have a lot of money, Craig, if you don't have a lot of money, do you think you're going to make this work? Do you think you can actually research these trades, take these trades, follow what we are doing? I think you will. And for you too, was it Lenny? And for you too, Lenny, what if you don't have a lot of time, as you say? These are not day trades. The vaccine trades are not day trades. We usually we have a time window on these trades and investments all the way through March 31st. We've already started to do some investments, and they're all still good to get in, but we're only getting started. Like, this is literally just the beginning. That's why we're giving you full unrestricted access until March 31st, because that's when we think this portfolio will have this opportunity will have run its course. So there's an opportunity here to get in, and it's a Black Friday special, I guess is what I'm trying to tell you. What kind of other trades do you do in the trade of the day? Sure. So if you look at the trade of the day, and let me go back to the to our dashboard so you can see this. Okay, so when you get into the Inner Circle membership, and again, you get full unrestricted access to everything, you get access to the trade of the day as well. So every single day, 5 days a week, you are going to get a trade alert sent to you in addition to the vaccine trades. It's all in addition, right? So for example, this week we booked profits in Netflix and Disney. We bought some XLE the other day. We took some profits in the QQQ. We did this and that and the other. So there's a lot of stuff that we're doing, and these are all trades of the day that get sent to you in the morning. Okay. Now, in addition to that, we do live weekly members webinars every Tuesday, where we walk you through the opportunities, and we also have an investment portfolio. So if you don't want to do trades, but more investments, then first of all, not only is the vaccine portfolio great for you, but we also have an actual investment portfolio. The investment portfolio is up 100% year to date. 100%. That's what we call bucket 3. That's our investment portfolio. So all this stuff is included, all of it. And of course, the Market Rover, which is our online proprietary scanning tool that's accessible from anywhere, is also included until March 31st. Okay, that's the deal. What about the stock? Sure. Okay, if you don't like to do options, not a problem. Again, we do these trades. We do these trades with stocks. Like I said before, we will send you a stock opportunity, right? We will send you an options opportunity, and we will send you an ETF opportunity. So whether you like to do this with a stock, an ETF, or an option is up to you, right? We do all of them, so you can track whichever you want. We send you an exact email when we enter the trade, and we send you an exact email where to get out of the trade. Let me show you guys what it looks like, just to give you an example. Let me go to the inner circle, and I'll quickly show it to you here so you can see it. I'll just, in full disclosure, go to the post-vaccine portfolio. I'll show you the vaccine portfolio, for example, right? So I'm gonna click on that, trade alerts, and it's also posted as a portfolio view. So if you want to see, for example, CCL, this is what it looks like. This is the blog post, and this is also what it looks like as an email. All right. So what happens is you get this: a description, an entry point, target 1 and 2, a stop loss, and the options idea. All right. Does that make sense? So you get everything you need in great detail. Yes, exactly. So that's it, folks. That's what we have here today. If you want to join, it's $297. That's a one-time fee, all the way access all the way until March 31st, 2021. If you want to continue with the inner circle after that, you certainly can. But we think that the opportunity here for this trade will be over by March 31st. And again, we're only in second inning. I think there's a lot more to go here over the next 4 months. And I think with that, what I will do is pass it back to Jeanette. I will say that there's a great lineup here. Certainly listen to the other speakers. I know Sal's going to talk, Andrew, Ron. So hope.
Hey, Serge, you have about 4 minutes if you want to. Can you see the questions?
Yes, I think I can.
Okay, I'll start spitting.
I was trying to address as many as I can.
Okay, I don't know where you landed.
Yeah, no problem. Yeah, I mean, so the question is, do you give exact entry and exit points? Yes, absolutely. How long is the offer good for? I don't even know.
Okay, all right. So the way this offer works is we're closing down this price point at midnight tonight. So it really goes out to all the people that are here and they're live and taking action. So you've got till midnight tonight. And I see the questions. I've answered this a couple of times for you, Serge, just because I know. But if the question is what happens after March 21st, or I'm sorry, March 31st of 21. And so if the portfolio is still viable, when we get to that point, Serge will come out and say, okay, we're just going to charge you the same amount and run another 90 days or another, however long he says it ends up being. And that's really the unknown here for us, is when this thing's going to play out. And so if it's continuing and there are things happening, then Serge will come out and let you guys know. But otherwise, you're getting a bonus here to be part of his inner circle. And if you, after the end of the run at the end of March, if you want to stay on for that, the inner circle is $147 a month. And we'll make sure that we send you plenty of emails leading up to that to let you know what the plan is.
Yeah. Oh, and by the way, and yeah, and I keep seeing the question, like, what if you don't trade options? This is not about, I mean, we do options, we'll give you options trades, but like, for example, let me just put it this way. So this is the trade alert we sent out, a couple of weeks ago on Carnival Cruise Lines. And you see, we talk about the stock, right? We give you targets and we give you an option idea if you want to do the option. So let's go back to the chart of CCL. And we bought it at 1550 at the time, or 1650, excuse me. So if all you did is would have taken this trade, you would now be up 33%. Who thinks that would be worth it to pay $297 right now to get access to this kind of stuff all the way through March 31st? That's a question you have to ask yourself, is if you think this is the kind of stuff that you feel makes sense for you.
All right.
And that's the best part.
This question I see a lot, and it's like, can you give like what you would consider to be like the minimum dollar amount they could make these trades with? I know it's all over the place, but like, is it $1,000 account or a $5,000 account, or
I mean,
it's not day trading
you
stocks?
could do it. So. Sure, you could do it $1,000 account and just trade some options. I personally would prefer people don't put every single penny that they have into one thing. So I would say 5,000 is probably, closer. But it really depends on people's, risk aversion levels. Like that ends up being more of a personal question. But I think 5,000 is probably closer to what you want to do. But if you just want to dabble and take a couple options trades, I mean, you can do that with $1,000, right? That's not a problem. You certainly can. But if you want to take full advantage of everything, I mean, like I said, our investment portfolio is up 100%. Investment portfolio is up 100% this year. The trade of the day, the swing trade portfolio is up 72% year to date. And this portfolio itself is already up nicely. We only started it 2 weeks ago. CCL is up 33%. So, yeah, the link is in the chat box, Agi. It's studytradersecrets.com/vaccine.
Studytradersecrets.com/vaccine. I'm going to put it in the chat box too, real quick.
Oh, I might have typed it into the organizers only thing.
And that is okay. Send to all.
Good question. John is asking, do you take the position before or after your alert? Well, let me ask you this, John. Unless I was managing $100 billion, I don't think it would matter. To put your mind at ease, though, no, we wait until the trade alert goes out. I mean, if we were to buy, let's say, United Airlines, do you really think I could move the market enough for it to be meaningful? It's 0% chance of that. And because we don't buy small stocks, right? There's no penny stocks now. These are all like big companies and stuff. Good question.
All right.
Yeah, just wait for.
Go ahead.
I mean, I think the open action. I know. It's my time's up here, but just one last question. I think by VS. We will start getting going on this more again on Monday. Today, obviously being Black Friday, people are out shopping and doing stuff and relaxing. But we'll start again on Monday. The open positions on the actual post-vaccine portfolio are valid to get in if you want to. I wouldn't rush into it on a Friday personally. And then, of course, on Monday you'll start getting the trade of the day again, and we start rolling into a new week. So.
Right, and so how do they remind them again how they get noticed of the alerts? How do they know when you're making a trade?
So the trades get sent out by email when we get in and also when we get out. It's an email, right? And again, these are not day trades for the post-vaccine portfolio. We do day trades in the chat room if you want to join that. And they're emails. So also for the trade of the day, which is a separate portfolio that we run, if you want to get those in the morning, which you will, that's an email when we get in and when we get out, and those are swing trades as well. So it comes right to your inbox, so you don't have to go chase anything.
Yay.
It could be more than one. Yeah, it could be more than one email a day for sure. But again, the point here isn't to overwhelm you. The point is to do something when there's something to do. And there's plenty to do, but it's not going to overwhelm you. So.
All right, Serge. Great job. I appreciate you. I'm going to go ahead and take back the power over here and make myself the presenter.